Nifty now and all its viewers from the Reliance Capital Group. I think the last 1 year, obviously, as you said, has been pretty good for equity investors. And this is despite the fact that we had a lot of challenges. We had structural reforms in the form of demonetization, GST, and some others, which were near-term challenging. And despite that, we have seen decent returns being made. So I think it is very clear that investors are looking at India from a much longer structural perspective, and I think that's a healthy sign. Hopefully the next 1 year also would be a decent positive return for the investors, and we remain quite optimistic.
But you are convinced that one section of the market is relatively nervous that this disruption would continue to weigh on the corporate earnings. Are you convinced that these are temporary in nature and hence the market worry is perhaps not justified, and the restocking and economy will come back?
See, we have anecdotal evidence in the form of a reform like GST being implemented in some of the other countries in the world. And there we have clearly seen that it takes at least 2 to 3 quarters for the economy to come back in its regular mode. I think in India also we are only maybe 3-4 months into the reforms. Already the government has been having an open mind and an open ear in hearing the problems and trying to sort out the problems specifically from small businesses and traders. And our view is that this festive season would to some extent take into account the challenges and come back into the growth form. But in the next 3-4 months, we are quite hopeful that this will turn out to be one of the biggest reforms in the Indian economy.
Sunil, you are someone who has seen the market through the cycles over a 25-year period. Last 3-4 years, every financial year we start with hopes of strong earnings. By the time we end the year, it tapers down. But right now, with this disruption, you think next 2-3 quarters, indeed earnings will rebound, or will we fall in the same trap once again?
I think you are right. We have been talking about an earnings growth in FY16 and FY17, and now we're talking about earnings growth in 18. But I think things have been a little bit of challenges, and as I said, demonetization derailed the economy for 2-3 months. GST has derailed the economy for 2-3 months. And we have to take cognizance of that fact and also understand that near term, definitely business models have had to realign to the changed taxation scenario, and the earnings have only been deferred. It's not that they will not be there. I think this quarter is going to be relatively better as far as corporate earnings are concerned. We believe that the September quarter Nifty earnings should be in double digits, which would be a good thing after a long time. And there are new sectors which are contributing to this. So metals, which was significantly taking the earnings down, should give it in fact a positive surprise. Our view is that the banking NPA is definitely still something to watch out for, but we have crossed the peak as far as the provisioning is concerned, and from here on you will start to see some positive uptick as far as bank profitability is concerned. Even on telecom side, there's been a massive consolidation, and I don't know about earnings, but we are seeing competitive intensity going forward reducing quite significantly. So among some other large sectors, oil and gas has been one of the better performers, and with oil also stabilizing slightly upwards at around $55, you might see really good earnings from the oil and gas sector also. So I think overall almost 60-70% of the component of Nifty should report good earnings, and I think for the first time in many quarters we should hopefully have a double-digit earnings growth.
Right. Sunil, let's talk about some of the sectors which are new age sectors which are seeing increased representation in the market. Asset management companies or brokerage companies with large asset managers also in their book, or other new companies which are now on the anvil. Plus insurance is getting more representation. What's the outlook in these two pockets? In fact, your company has also been a beneficiary of flows, additional flows coming to asset management companies, and value is being arrived upon. What are your thoughts here and the kind of potential return which can be made in asset management plays and insurance plays?
See, I think this is a subsector in the financial services which we are most bullish on. And the thoughts are very clear. One, we are a country of youth savings. So, the retail savings are almost $500 billion every year, which is a huge sum of money. The second thing is there is a clear shift from savings going into physical assets, now going into financial assets, of which a big beneficiary has been the asset management business, the wealth management business, and the life insurance business. So I think there is a clear case of these businesses growing at a significantly higher rate than the underlying GDP or the underlying financial services. So we remain quite optimistic and quite positive on all companies which are a beneficiary of a shift towards financial savings. And the good thing is most of these sectors don't need any capital for their growth. So I think the whole growth is going to be like cash generated for the shareholders, and I think that is a great business to have. You have high ROEs, you have high growth, and it's cash generating or cash throwing back to the shareholders.
And biggest resource is actually people in these two kind of sectors. Sunil, if one were to watch out for the next 12 to 18 months far out, looking at the way economy and the market is behaving and the factors which are at play, what are some of the areas in your view which you would have on your radar, which are the most exciting areas to watch out for in terms of developments, earnings, or even return potential?
See, I think we are in a transformation phase as far as the economy is concerned. So we have had 3 years of rule from the new government. There has been a lot of effort made in removing inefficiencies, in making the country more compliant, move towards digitization and technology. And I think these are the segments or the segments which benefit out of these are the ones which would do really, really well. So I think the government initiative on infrastructure, on housing for all, on cleanliness, linking of the rivers, I think these are some of the huge projects, and we are in the early stage right now as far as implementation is concerned, but we are very sure that implementation is finally taking off from the ground. Even on railways, massive capex is planned. So I think some of the segments which cater to this, whether it is cement or some engineering company, should benefit. As you mentioned earlier, move towards financial savings. I think that would be a great sector. Companies and sectors which benefit from the shift from unorganized to organized, whether it's home improvement or some of the consumer items where there was a lot of, you can say, inefficiency in terms of unorganized sector being there and trying to make good of the arbitrage between what the organized sector was paying and what the unorganized sector was able to avoid. I think those would be again sectors which would benefit as these reforms start to stabilize.
My last question to you would be to assess your understanding of how the rural part of our economy is doing, and hence the opportunity which lies in rural place, be it farm equipment, tractors. The numbers are indicating back sharp rebound, or MFIs, or irrigation, or these kind of plays. What are your thoughts here?
So I think on the one hand we have monsoon, which has been pretty good for the second year running, so there is going to be a tailwind. Second is the government is made its intention clear that they want to double the farm income in the next 3-4 years, and I think that is good news for the rural economy. And third is the yields and the practices of farms are moving up. Even the rural towns and villages are growing in terms of whether it's education or demand for products and services. I think all this means that products which are catering to the rural segment, you mentioned about farm equipments because labor is in short supply, or even consumption items because they're exposed now to the consumption items which they were earlier not exposed to because of penetration of mobiles, medias, and so on and so forth. So I think that segment also looks quite promising.
All right, on that promising and optimistic note, Sunil, thank you so much for your time. Guys, with that, it's back to you in the studios.